Welcome back, everybody, to the Schaefer Stock Market Podcast. I am Josh Selway. I'm an editor at Schaefer's Investment Research. If you want to check me out on Twitter, I am over there at Selway, Selway 151. Of course, as always, check out Schaefer's on Twitter at Schaefer's. We're on Instagram. We're on Facebook. We're on, where else are we at? StockTwits. Twitter, did I say? I don't know. I'm already confused. Check us out everywhere, or just go straight to schaefersresearch.com to check out our intraday blog. We write about all kinds of different things. Check out our free newsletters. Check out our education section. Check out our premium services that we offer, our trading options services. We offer plenty of them. Check it all out. But today, a few different things I want to talk about. We will start first with a quick check-in on the broader stock market because we are soaring to all-time highs. Indexes are trading at levels never before seen, all thanks to the Fed. Of course, it's not about the strong economy. It's not about good economic data. It's not about any of these things. Nothing on the trade front. It's all about the Fed and the fact that the Fed is now expected to cut interest rates at its July meeting. So Fed Chair Jerome Powell has been testifying in front of Congress this week, and he said a bunch of different things, but essentially has been giving dovish comments suggesting more monetary easing could be coming. A few big takeaways that I had from this. One was that Powell put attention to what he called notably slower business investments, essentially pointing to the lack of commitment from businesses to put up a large amount of money for these big bets. And this could be something related to the trade tensions that we've seen pick up. That has been one thing that a lot of people covering financial markets have suggested could happen because of the tariffs. Some people say they are a good negotiating tactic. This is a way to put pressure on China, so not everyone's bashing the Trump administration, but also there are usually negatives to just about everything, and one of those could be that businesses just don't know what to expect, and because of that, they're not willing to make large investments. You know, if they're working with Chinese businesses, developing those relationships, the tariff situation and just trade tensions in general could make it difficult to form those relationships and make the investments that some of these companies want to make. So that was interesting to see Powell point that out as an overhang on the economy. He's called out a slowdown in the global economy, which we've talked about throughout 2019. We're sitting here in July, and it's like I've been talking about this all year, but here we are with stocks trading at all-time highs, and that's kind of the weird paradox that we've seen. We've seen this before where the bad news is good news. So you have the Fed chairs talking about the slowdown in the economy, global economy specifically, yet, of course, stocks at all-time highs. And speaking of the trade war, we have seen some headlines that China and the U.S. are again renewing conversations, blah, 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 blah. Not many updates on that front, but we did just get some earnings out of tool maker Fastenal, which makes it a wide range of products, and they missed on earnings, and they provided some color on their pricing right now in the middle of this tariff battle, and they said that they raised prices during the quarter from products from China, but those increases were not sufficient to also counter the general inflation in the marketplace. So we see here one example of a company, this industrial distributor, essentially raising its prices, but yet still those price increases have not been enough to offset what's been happening with the increase in tariffs. Now, Fastenal stock, that is ticker FAST, for those interested, is down over 4% today, and it's on pace for its lowest close right now for its lowest close since around January. So a pretty big pullback there. And something else to watch for here, I said on a few podcasts back that what's interesting is that what we could see happen here is that if this China trade situation ever finds an endpoint, if it ever officially wraps up and doesn't just keep dragging on, what we could see happen is then the focus shifts to Europe, and the Trump administration could then sort of take the same playbook, possibly with countries in Europe, where we see another trade drama unfold, and this is already sort of happening. We see here that France is adding this digital tax. This is something that was speculated for a while and that they warned about could be coming. And France is now implementing this digital tax that's falling most heavily on the U.S. companies, the U.S. tech giants like Amazon, Google, Facebook, companies like that. And it's interesting that Amazon came out because the Trump administration said how unfair this was, that they're going to retaliate and go to bat for Amazon. And of course, Amazon thanked the Trump administration. And this comes after Trump historically has taken shots at Amazon CEO Jeff Bezos, but now they're on the same side fighting this new tax out of France. Moving away from trade now, the other big storyline this week, especially just in the past couple of days, has been healthcare. Of course, I mentioned healthcare a while back because I thought, many believed, that it could be one area where we saw some bipartisan action. Congress members really want to lower drug prices. It's been a focus of the Trump administration as well, but nothing has really come to fruition with that. And in fact, just today, we had the Trump administration withdrawing its proposal to get rid of rebates for government drug plans. The Trump administration essentially was saying that these negotiations behind the scenes between the pharma companies and the insurers incentivize the drug makers to list their prices artificially high, and then that would during these negotiations, of course, they would lower them as a result. So the Trump administration was trying to get rid of those deals, but right now they will be withdrawing that plan. They are also, the Trump administration is trying to continue to bring more transparency into drug prices across the board in different areas of healthcare. There is also this push from Congress to propose legislation that could end the surprise medical bills that people get. Sometimes people get these bills from doctors that they don't even remember seeing, or doctors that just came in the room and did something. They're actually out of their insurance network, and luckily that is a bipartisan issue. It's hard to really make a good argument for that type of activity, but there's a lot of lobbying, of course, from the healthcare space that is slowing that down. And there was an article on the Wall Street Journal just the other day about this that was interesting to read about. And one other thing here on healthcare before we get into the big kidney dialysis news that just hit this week. It was interesting on the Wall Street Journal's Heard on the Street. It was talking about Uber and Lyft working in the healthcare space to bring patients to healthcare appointments, doctor's appointments, and whatnot. So that is something to watch for those two companies as well. But as I alluded to, one of the big stories this week was that the Trump administration is pushing for more in-home treatment and options for kidney disease, chronic kidney disease. And there are a lot of big statistics here that I wanted to touch on when this news hit. I wasn't really aware of how big of an issue this was, but the numbers behind chronic kidney disease in the U.S. were pretty fascinating to go through here. So Bloomberg pulled some of these numbers from a government-funded data registry that said Medicare spent $114 billion on kidney care in 2016, which was about 1/5 of the program's total budget. And it said that $35 billion went to patients in their late stages of kidney failure. And I was reading earlier that is one of the main goals here about what the Trump administration is trying to do with kidney care is avoid people making it to that late stage of kidney failure treatment where a lot of money is being spent right now, and hopefully we can avoid so many people reaching that point. I also saw data that said that 15% of the U.S. adult population in 2018 suffered from chronic kidney failure. So this is something that affects a large proportion of the population for sure. Now, a few names here to watch after this news comes out here. For kidney dialysis, we have a couple companies to look at. We have DaVita, which is ticker DVA, and Fresenius Medical Care, ticker FMS. Now, initially, when this news broke earlier in the week, these stocks sold off sharply, but they have been rallying back since. Wall Street has kind of changed its tune as more details have emerged, and they've really considered this news a little bit more. And the brokerage firm SVB Leerink issued a note this morning touching on this issue, and it said that the Trump administration's move should be good for DaVita and Fresenius, but it mentioned American Renal Associates, that's ticker ARA, and it said that that company has not made the proper investments in at-home care, so that stock could actually struggle from this move from the Trump administration. But Leerink also said that the four major health insurers, that being CVS, United Health, Humana, and Anthem, are all positioned well to benefit from this push for at-home dialysis. So those stocks are soaring today, along with this news from Leerink and also the Trump administration's move to withdraw its plan for those to fight those drug rebates. Okay, I want to talk about a few more names here. One of them I've talked about a lot this year, and that's because it's been red hot. Snapchat, parent Snap, it is touching fresh highs again today. The shares of this stock have been on fire. They came into 2019 around $5, and now they're above $15 per share. Again, at fresh highs today. Bank of America Merrill Lynch raised their price target to $17 per share. They are bullish on Snapchat's new gender swap feature. I don't know if you're on Snapchat, if you've seen anyone with Snapchat. They have this new filter that makes you, if you're a guy, it makes you look like a girl, vice versa. And I guess Bank of America Merrill Lynch thinks this will help drive the stock higher. It says it might bring more people back to the app. Their data shows a lot of new downloads recently since that they added this filter. So I guess a lot of people are out there having fun with this new Snapchat filter. It's been working for the stock, as I said, at new highs today. Analysts are also buzzing about Netflix thanks to season 3 of Stranger Things, which I will say has been fantastic. I haven't finished it yet, but it's been terrific. And we just had analysts come out saying that it looks like the growth in popularity for Stranger Things is continuing, and this could bring more people to Netflix in the coming months. And I just think it's interesting that these are short series. I think there's like 8 episodes in Stranger Things, so Netflix really knows what it's doing, making this show perfect for its streaming platform. Short seasons helps them get the shows in and out faster. No need to make these longer episode seasons like you historically may have seen in TV, and this could be a trend that we see going forward with these shorter length series and seasons from popular shows as streaming TV continues to pick up steam. And this final stock I wanted to talk about was supposed to go under our big winners category, but when I checked on it today, it was deep in the red. I'm talking about Vizlink Technologies, ticker VISL. On Wednesday, this stock exploded. It went from down around $1.50 a share all the way up to $8 a share. Topped out at $8 a share, but then closed at around $4 per share. And today it's down another 55%. So quite a ride there for Vizlink. What ended up shooting the stock higher on Wednesday was that the company landed a $2.8 million contract with the U.S. Army. Vizlink specializes in advanced communication technologies. So they landed a big Army contract. The stock soared higher. It's up over like 300% at its intraday peak, but it gave back a lot of those gains, and now it's down another 55% today. So it was a good run, Vizlink. You had a good run, but I guess all good things have to come to an end. Like this podcast, I'm going to leave it right there. I know I wasn't here last week for the 4th of July holiday week. I was too busy eating hot dogs, taking time off, sitting out in the sun. But rest assured, I will be here next week talking to you about stocks again. That's what I love to do. If you could, wherever you're listening, subscribe, leave a nice review, say how great everything has been. I really appreciate everyone who's been listening. We continue to get more and more listeners every week, so thank you so much. Tell someone about the podcast if they want quick and easy updates on the stock market and what's happening in the world of business. But until next week, again, I am Josh Selway, and I will talk to you soon.